Hey everyone, welcome back to the channel. This is Lovejote from Market Makers University as always, and today we're going to be talking about 3 simple trading strategies that you can use in your trading today. I'm going to be keeping things very simple, very easy, very repeatable, just using some simple technical analysis that you can apply in your trading today. Oh, and also, by the way, for those of you who stick to the end, I'm going to be giving you a very important bonus tip that can increase your profitability by a long run. So definitely stay to the very end to get that bonus tip. But anyways, let's get started. Okay, so let's talk about the first strategy. So first things first, let me go ahead and move all of this stuff away so I can use this as a blank canvas to essentially kind of draw and explain to you what we're going to be talking about. So the first one here, we're going to be talking about a simple break and retest. So let me kind of explain how this works. So occasionally you might find yourself in a position where the market is in a range and it's at a point where the market will break the range, and if you want to enter a trade, it wouldn't be wise to chase the market and enter a buy at any time when the range is broken. So if you see the market breaking the range, so let's say the price is ranging in between here, and let's say it's ranging in between here, newbie traders might see that this range has been broken and the price is now climbing up. And new traders would essentially chase this trade, chase the market going in the up direction, and simply enter a buy just simply because they see that the price is going up. So instead of doing that, it is a lot wiser to wait for a better entry to get a better price to enter the trade on the retest of the range. So what some experienced traders could do, they could wait for the price to retrace and come back down and touch the point where the price was creating some sort of reaction, a rejection, another rejection, a resistance area, wait for the price to approach this area again, and then enter the buy prior to the price increasing. So they could enter the buy down here, be patient, and then have a better setup instead of entering up here and then getting hit with a stop loss if the price does reach the retest zone. Now, a couple things to note here, that once the price does breach this consolidation area, it doesn't necessarily mean that the price will come back down and retest this. Sometimes the price will just continue to go, and if you are waiting for your pending trade to get triggered, let's say maybe you're waiting for the trade for the price to come back down here, hit your entry, and then go back up. If the price never comes to your entry to where you have set and scheduled your trade, then that's just going to be a completely missed trade. But that's just part of the process. There's no reason to cry about it or worry about it or become depressed about it. We wait for the next setup to occur. So that's the first setup. Let me go ahead and give you a couple examples so you can see this in action. And also, real quick, when we're talking about break and retest, it doesn't necessarily have to happen during a consolidation. Let's say the price is moving in a certain direction, and you see and you notice that this is the most recent relative high. You could wait for the price to breach that high, and then you can set your entry on the retest of the most recent previous high, and you can potentially wait for the price to come down, strike when the price approaches this zone, and then have your buy activated to enter the trade in the direction that the price was already moving. So this is where you would activate your trade, and then potentially it could go in your favor. Okay, so let me go ahead and give you a couple examples here. This one, we are on USD JPY on the 4-hour chart. You'll notice that the price was consolidating in between this range right here and this top range right here. So this would be the point of consolidation. The way I'm drawing these zones here, especially this top one, which is the more important one in this example, is I'm making sure I include all of the tips, all of the tops as possible, including this small little wick up here. I'm going to drag this up, make it a little bit thick. I want to keep these zones as thin as possible, yet still trying to include all of the tops, or in other words, all of the peaks. So as we see the price consolidating between the tops, the bottoms, the tops, the bottoms, the tops, the bottoms, and tops. As it breaks, we know it isn't as wise. It isn't a wise decision to enter a buy up here. Instead, it's a lot better decision to enter a buy if the price does end up approaching this zone again. So we could draw this. Let me just hit the replay tool to kind of show you how you would do this in action. We would draw this zone and we would extend this zone into the future. Why? Because this is going to be our reference point. We are waiting to potentially see if the price will touch this. And if it does, this is where we want to enter the buy instead of entering it up here. So as we draw our zone, what we can do at this point, we can enter what's called a buy limit. I have a video on this channel explaining what a buy limit is. I'll link it up here if you want to see how those work. But let's say we enter a buy limit. Let's say we enter the buy limit at this price of, let's say 135.33. And we just have this pending trade just waiting to automatically get filled, waiting to automatically get activated once the price does reach down here, if it does. And if the price doesn't reach down here and it continues going up, that's fine. We would just delete the pending trade. We would just delete the pending order and move on with our life and look for the next potential setup. So as the candles continue to move, at this point, this would be the candle where the trade activates. Now we are in our buy. And as I've explained in multiple previous videos before, we want to make sure that the stop loss has been adjusted to be below the entire range, the entire zone that we've drawn before. So if our zone is this thick, we want to make sure our stop loss is not in the zone. We want to make sure the stop loss is below the zone, beneath the zone, giving ourselves enough buffer just in case if this was the break and retest point. In case this was the break and retest point, we don't want the price to come down here and hit our stop loss. We want to always make sure we have that bit of buffer. So as we see, the price has now created a support zone where the resistance previously was. So what we can do is we can continuously extend this into the future. And now here we have another zone. We have another consolidation area. So we have one consolidation down here as a support. Then we have somewhat of a resistance zone right here. So now I want you guys to pay attention to something real quick. So remember, previously, this zone, this was a resistance, resistance, resistance. And now this has turned to support, support, support. Now the price has been consolidating between... Now the price has been consolidating between this range right here. It is now between this range. And what happened to this range? This range has now broke to the downside. So just like the example I gave you previously, as in it wouldn't be smart to enter now, in this case, a sell. It wouldn't be smart to enter a sell in the down direction here, because this would be us chasing the trade. This is what newbie beginner traders do. They see their price coming down and they want to chase that trade and they don't want to miss out. Instead, a wiser decision, a smarter decision would be to be patient and wait for the price to possibly approach this break and retest zone again. And if and when it does, and if it does, then enter the sell to get ourselves a better price, a better entry, and to allow us to get a smaller drawdown. So what we could do, we can now, just like we created that pending buy order, we can also go ahead and create a pending sell order, pending sell limit. And again, what do we do with our stop loss? We make sure our stop loss is past, is beyond the zone that we've drawn. Why? Because just in case this tip top area or this area or this area was the actual break and retest zone, we don't want to get falsely stopped out off of this trade. Our trade gets activated, currently a little bit in profit. We want to make sure that our stop loss is past the zone. And as we allow this continue to play out, we were able to successfully enter the trade on the break and retest of the same exact zone. So let me go ahead and give you another example. This one's going to be on XAU USD on the 4-hour chart. And this was going to be the second type of break and retest that we talked about, where the price isn't consolidating between 2 points. Instead, this is going to be the example where the price is increasing and then it has a pullback and you want to get the retest on the pullback. So let's go ahead and talk about this example. So as the price is continuing to move, we see that the price has now pulled back, or in other words, has created an area where the price is reacting or rejecting. This could be an area where we would create that zone. So this is where we want to create that resistance zone, because we are wanting and we are waiting for the price to not only pass it like it did, and we are not going to chase the trade. We're not going to enter the buy here. We're going to wait to see if the price does come back and then strike when the iron is hot. We want to strike at the best price if the price comes back in this vicinity right here. So we will put our buy entry right in this area. So there our trade gets activated. And we now see a trade gets activated. And here we now see the price has created another area where it is reacting. So this could also represent another reaction or rejection point where the price is having trouble breaching. And now we have this first trade activated. And if we wanted to add on another trade, maybe a second trade, using the same exact concept, a break and retest in the continuation, we could enter another trade if the price does approach the same exact area again. And if it does, we will be using this area as the break and retest of this zone now. Trade got activated right there, and we are now currently running in profit. So this is the first type of strategy. Pretty simple, pretty straightforward. I made it simple enough to where you can apply it into your trading strategy, no matter how new or no matter how of a beginner trader you are. These are very simple, easy patterns that you can find in the markets today. So let's go ahead and talk about the second strategy. Let me go and move this all away so I can have a blank canvas to work with. So this second strategy, and this is going to be trading within a consolidation. This is going to be trading within a range, ranged trading. So let's go ahead and give an example of how this would work. So let's say the price is consolidating in between two areas. So let's say the price is messing around about these 2 points of price. The way we would trade this is once the price approaches the top of the range, you would want to look for areas where you can enter a sell, where you can enter, where you could short the market from the top. And if you want to increase your chances of these trades working, entering a sell at the top of these ranges here, what you can do is you can employ candlestick patterns to increase the probability that the trade will work in your favor. So if you see something like a shooting star, maybe once the price approaches up here, you see the candle and then you see the tail shooting at the very top. This shows a potential sign of reversal. And at this point, you could enter a sell. So the same concept down here. Let's say you want to enter a buy on the bottom of the range. What you can do to increase the probability of the trade going in your favor, you could possibly wait for a confirmation candle. Maybe you see a candle, and I'll just use this as the body, and I'll use this as the wick. Maybe if you see a candle creating this type of formation, this could show buying pressure, or in other words, a reversal pattern, to allow you to have a higher probability of this buy working in your favor. So now this is, simple enough. You want to enter when the price is low, and you want to enter a sell when the price is high. But you might be talking about, wow, Lovejoy, this is like super, super, super easy. Like, this is just way too easy. And you're right. I'm just giving you a very simplified example, but the price isn't always going to be this clean, this sharp, and this very easy to trade. Sometimes the market will test your emotions. Sometimes the market will test your patience. As the price bounces down here, it might mess around a bit and even come down again before continuing back up. And who knows, maybe by this point, if you were in the buy here, maybe you enter the buy here, who knows if you would have just been frustrated and just got out of the trade prematurely, maybe even got out of the trade at break even before the price continued to go up. So it's not as easy as the price going up, down, and sometimes the price can even do a false break before going in the direction that you were initially planning to trade in. So let me go ahead and give you some examples. So right now we're looking at CAD CHF on the 4-hour chart. Let me go ahead and apply the replay mode so at least you can see how we would use the consolidation zone. So again, right here we will draw the resistance area, and here we will draw the support area. In between these two bands is what's called our playground. This is where we would be possibly entering the trades. If the price approaches this zone right here, this would be a decent area to enter a buy. Or in other words, if the price approaches the top here, this would be a potential decent area to enter a sell. So we will go ahead and see this play out. It entered the zone. This would be a decent area to enter a buy. What you can do, again, you could use a buy limit to schedule a buy to allow it to automatically activate when you're not on the computer. The same thing you can do up here. You can enter what's called a sell limit to allow the trade to activate, so you don't have to sit there and stare at the computer waiting for the price to approach this, or in other words, watching paint dry. And once the price approaches here, you notice here we have the shooting star candle formation. Once this candle is finished, this would be a decent area to go ahead and enter your sell. So you would see the price approach the zone and see the price get rejected from this shooting star candle formation. If you don't know what candle formations are, I'll go ahead and link it up here so you can see all the candlestick patterns. Once you see this shooting star pattern, you can go ahead and enter your sell. Make sure the stop loss is above the zone, and then you are in business. And there we go. And let me give you one more example, just kind of showing you how it's not always going to be as clean. So I've already kind of drawn this up for you. Notice this right here is a consolidation zone right here. These are support, resistance. These would be great areas to sell, great areas to buy. And if you try to enter a sell here, guess what? You most likely than not would have been hit with a stop loss. And as the price approaches this channel again, if you wanted to schedule or set a buy limit on this zone right over here, these areas probably most likely would not even get activated. So you would see the price almost approach it, not quite hit it, and you probably might get frustrated and allow the price to come back down, and again, didn't really hit the bottom, so your trade still didn't get activated, maybe still was a little bit frustrated, and then finally have your sell indeed get activated, and then have the buy finally indeed get activated, and have the sell get activated, and have the buy get activated again. So it doesn't work 100% of the time, but at least it gives you some sort of structure you can use in your trading. I did want to give you an example of areas of sometimes where it doesn't work, because trading is never going to be 100%. Trading is never going to be by the book. You know, you're never always going to have textbook type examples. The market is always going to be different in every market condition. So always be aware of that. Now, the third strategy we're going to be talking about is what's called the counter trend. Now, I've intentionally put these three strategies in a very specific order. The first strategy that I taught you has the highest success rate. The second strategy I taught you has the medium success rate relative to these three. And this one right here has the lowest success rate out of all three examples that I've shown you, but at least it does give you trading opportunities. So this one right here is what we called counter trend. This is if you wanted to take essentially a contrarian approach to trading and you want to trade against the trend, you could definitely find some setups that will go in your favor. But remember, as traders, we always want to, it's always more preferred, it's more ideal to trade with the trend. But if you do find some opportunities that are going against the trend, those can definitely be some quick trades, some quick wins that you could capitalize on before the trend continues in the direction that it was already going in. So essentially how this strategy works is as the price is going in one direction, in this case the up direction, sometimes you'll have these small little retracements in the opposite direction where you could potentially enter trades off of a trend line before the price continues going in the direction it was already going in. So for example, if the price has created a high, reacted, rejected, and created a lower high, what you can do is you can create a trend line and set yourself up for a quick, small little sell, nothing too big, to allow you to go in the counter direction of the entire trend, to allow you to get at least some pips, a few pips before the price continues in the direction it was already going in. So this counter trading, you should never consider this a way to trade long term. These could be trades that you want to take, just smaller day trades, smaller scalp trades going in the opposite direction of the initial trend. So as the price continues to go up, if you see a bit of retracement, you could enter a sell off of one of the retracements after you draw your trend line, enter a small trade, and then wait for the price to go back up, because there's a higher chance that the price will continue going in the direction that it already has. This one is a little bit more complicated than the other ones, but it does give you a lot more opportunities to trade in the market. So you'll have to find that balance. And here we are on CAD JPY. I've already drawn these examples out for you for the sake of time, just to keep things short and sweet. You'll notice the price is currently going in the up direction. And here's a small one right here. In fact, let me go ahead and draw it right here. Right now, you'll see I'm on the daily time frame, but if you kind of go into a smaller time frame, for example, the 4 hour, you'll notice as the price was going up, the price created a little bit of retracement, and the price bounced once, bounced twice, and here we could enter a sell for a short retracement. This is where we would enter a small sell going in the down direction. As we continue forward, same concepts happening here. It's creating a small retracement, 1 bounce, 2 bounce, 3 bounce. You can enter a sell right here, or you can enter a sell right here, or you can enter a sell on this retracement right here. Many opportunities for you to enter a short, a small trade before the price continues in the up direction. Another area for a sell. Price continues to go up. Why? Because the trend is continuing to go up. And here we have some additional short, smaller trades going in the opposite direction in order to enter some counter trend trades. We got a lot more opportunities to enter into the market, entering many shorts before the price continues to go in the up direction. And here we have some more examples of counter trend trades. You can enter a sell after we have the first high, after we have the second high. This point right here, this would be the area where you would enter your short because it's the third touch. And then here is another area where you would enter your short because it is the fourth touch before the price continues to go in the up direction. Now you'll see the trend is now going down. Now on a downtrend, the counter trend would be going in the up direction. So in this case, the trend is trending downwards, and now we would be able to enter some counter trends in terms of buy. So we have to wait for the first touch, wait for the second touch to confirm the price is now going in the other direction. And once we have our first two touches, we could enter on the third touch to get us that small little retracement trade before the trend continues to fall in the down direction. Again, these are always smaller counter trend trades. It does give you a lot more opportunities to enter into the market, but the problem is you don't know when that counter trend is going to end. So you must always be on point with your risk management and always have some stop losses in play. But it does give you a lot more opportunities. Those right there are the 3 simple strategies you can use in your trading. Very simple, very straightforward. The first one we talked about was the break and retest. The second one we talked about was the range trading, the consolidation. And the third one we talked about was the counter trend. Notice the first one we talked about was trading in the direction of the major trend. The second one was trading at a time where the price is consolidating. And the third one, which has the lowest success rate, but it does give you a lot more trading opportunities, is trading against the trend. So it's a safer play, safer move to trade with the trend, but you might be able to find a lot more opportunities trading against the trend. Just be sure you always have your stop loss in play and make sure you are using your money management properly and correctly and efficiently. Now, one big, extremely important bonus tip I want to give you is whenever you're using technical analysis, how technical analysis inherently works is the bigger time frames that you're on, the higher time frames that you're analyzing, you're going to be getting a lot higher strike rate, a lot higher success rate, a lot higher win rate, because technicals work better on the bigger time frames. And as you kind of go down the line to smaller and smaller and smaller time frames, your strike rate will be less. You'll get less winners, but on the contrary, you will get a lot more opportunities. So just know, technicals work better on the higher time frames. Technicals start to break down the smaller time frames you get into, especially when you get into the 30-minute time frame, 15-minute time frame, 5-minute time frame, 1-minute time frame. When you get to the one-minute time frame, you're essentially just gambling and you're like rolling a dice. So what you need to do as a trader, someone creating your own strategy based on your emotions, based on your mindset, based on your risk level, based on your patience level, entering trades just solely looking at the monthly chart, the technicals will work a lot better, but you might be entering one trade every 4 or 5 months, meaning not giving you many trading opportunities. If you're trading on the weekly chart, you'll have a high success rate, a high win rate, but here you might be entering 1 trade per month, maybe 2 trades per month, or maybe 1 trade every 2 months. As you kind of go down into the daily time frame, your win rate lowers a little bit, but here you might be entering 2-3 trades a week. So you have a lot more trading opportunities. Here, your win rate will go down even further, but you'll get a lot more trading opportunities. So you need to find the balance of how high of a success rate do you want and how many trading opportunities at any given time do you want. You need to find that balance, and whatever balance works for you, however patient you are, that'll be that fine point of the time frame that you need to go on so you can do your technical analysis. Personally, I'll just tell you, I like to trade on the daily time frame. A lot of people ask me all the time, what time frame do you trade on? Mostly, I trade on the daily time frame. That's kind of found what works great for me based on my patience and based on the amount of trading opportunities that I want at any given time, based on the currency pairs that I personally trade. I hope this video was helpful. I hope this video was informative. If it was, drop a like on this video. It really helps out the channel. And if you haven't subscribed already, feel free to subscribe. It's completely for free. And if you are subscribed, go ahead and hit that notification bell. This way, you will get notified the instant I upload a video and you'll be the first to know. As always, I have a lot more great content coming up for you guys, so stay tuned for the next video. Take care, guys.